Okay. Okay, Jared, I think we're on. I think Jared, MD QuantConnect.
Hi, how is everyone? Good. Well, thank you for your time. I'm Jared, QuantConnect, and it's good to be here. I thought I would start with giving you a little bit of an overview of what we do and what algorithms are for the markets. I'm not sure what the level in the audience is, but we'll start from the ground up. I'm Jared Broad. I'm a New Zealander originally and now based in New York. We started QuantConnect 3-4 years ago out of a naive idea to build a completely automated investment and retire. So starting with that idea, just to start from the ground up for the audience, what are these quantitative or algorithmic trading strategies? Really, it's nothing that complicated. It's just a computer or a piece of software which is investing automatically. There are millions of different types, so it's very hard to stereotype them. But in general, they can monitor many factors and are much more responsive and much more disciplined than a human ever could be. So the point is, though, that these days the markets are evolving, and just like everything else, like our planes are becoming computerized and our cars are becoming computerized, so are the markets. And so nowadays the stock markets are computerized. Trading is accounting for over 75% of all the trading that's occurring. And so, but for a retail investor, a mum and dad that wants to buy some shares, they really can't compete. They're at the whims of the market, and their level of sophistication doesn't even come close. And so on top of that, if you want to get involved with these quant funds, there's very high minimums. So that's sort of the background. And what we initially wanted to do with QuantConnect was to try and democratize this technology, try and make algorithmic investment technology available to any engineer, so that any engineer that knows how to code can use our tools and data and access capital from investors to design these strategies. And at the moment, if you try and buy this data, it's very expensive. And the computation and the processing power that you need is very high as well. So there's quite high barriers to entry that stop people getting involved. So back to the story that I was telling you about. We started with this idea. I was originally working in humanitarian work, and I had a lot of downtime, and I started to use that to design these automated investment strategies. And I had no idea what was in front of me, the road, and it took me a solid 9 months to really build a backtesting platform. I had to gather the data myself and clean it up, and then build a testing environment where I could experiment with different strategies, and then enable my technology to process orders and work with the exchanges. And eventually this got called Stock Track. And over that 9 to 12 months, we built this sort of intraday strategy program that could work on very low resolution data. And once we had this, over the last 12 months, I've been emailing friends and family on a mailing list, and I had been letting them know my updates and what we've been up to. And at the end of the 12 months, I wrote to them, I said, I think I'm ready. Could you all please send me $5,000? And so a bunch of them sent me money, and I naively started trading live with this technology. And man, I learned some lessons. Very expensive lessons. But so for starters, I made every beginner mistake that there was. and I'm just going to go over a few of these just for fun factor. Firstly, I designed this amazing strategy with 350% return per annum, and the only downside was I had to weather 10% possible drawdown. So I don't know how familiar you are with drawdown, but it's the best possible peak to the trough. So in reality, when you're trading with money that you got from your friends and family, and your drawdown is 10%, that's $5,000 or $10,000 of your friends and family money that in a single day could disappear, and you're sitting there watching your algorithm run, and you're completely paralyzed by fear. And so one of the first and most painful lessons was designing algorithms with a very low drawdown, because as a human, it looks great on paper, but when you actually start to trade it, you're the biggest barrier. And then secondly, I thought, okay, my last strategy had a low win rate. What I'll do to get over this human factor, I'll make it have a 90-95% win rate. So there's this technique called martingale, and I'm not sure again how familiar the audience is, but martingale investments are when you pick a direction, and if it turns out you were wrong, you double down in the opposite direction. So you just keep repeating this pattern until you make a profit or you go broke. And so, if you see the chart on the screen, that's the typical chart that you'll get from a martingale strategy. It'll look great. It'll go straight up until it doesn't, until you go flat broke. And so this was actually, I was running this strategy, and the cyclone hit Japan, and so the market's been crazy, and I lost about 10% in a single day, which was, this isn't my chart, but it was one of those dips in a similar fashion. So again, a very, very expensive and painful mistake. And then finally, another expensive, painful mistake was overnight holdings. So I designed an algorithm that was back-tested and working overnight to predict when there were gaps in the markets, when it gapped up on open. And it was beautiful, it had a good win rate, and we were running for about 6 months using this overnight algorithm. And in a single day, it was actually when Jobs announced that he had cancer, Apple plummeted. And so again, another very expensive but educational mistake. So it was over this process that we really came up with the idea for QuantConnect. We started to learn how difficult it was to build algorithms and the real learning curve that you had in isolation. On top of that, we had to gather the data ourselves, and it took a long time. The backtesting was very slow because I was running on my home PC. And then on top of that, eventually after about 18 months, I finally had a strategy that was working nicely, had very low risk. It was a good strategy, and I went to raise capital for it, and it was very, very difficult to raise capital without at least a 6 to 12 month track record. So there are a number of barriers to entry for emerging quants or emerging hedge funds that we identified. So we started QuantConnect. We started to build the platform, and for about the next 12 months, we were coding, building. So we formed relationships with data providers. We built this online development environment so that you could design strategies. We built this Amazon cloud so that you could design these strategies incredibly quickly, and you weren't limited to the speed of your computer anymore. And then eventually, fast forward the 12 months, we're starting to finally gain some traction. We put the system out live in February this year. We launched in London actually at the Innovate conference, and got some great feedback, which was really good. But we started from this stock track algorithm fund in 2009, built our prototype with a little bit of seed funding, and now we're just starting to get some community going and get some traction. It's been an interesting ride. Thankfully, the data is provided with by FXCM. It's the largest retail foreign exchange brokerage, and our US equities data down to the tick level is provided by QuantConnect. I thought to make it a little bit educational for you, to give you some background, I thought we would step through an example algorithm design. And this is all just based on my opinion. I claim no expertise as an algorithmic engineer other than the many mistakes I made over 2 years. But what I found was that for an algorithm, you really have to start your strategy based on a theory. And you'll see on the internet there's a lot of investment strategies based on the moving average cross, or any sort of purely mathematical theory. But in my humble opinion, I don't believe they work, because they're not based in reality. For any sort of real strategy, it has to have a foundation in reality. Otherwise, you're just observing some secondary or tertiary signal of the markets. So if you start with the primary signal, then you have a primary strategy based in reality. So for example, you have to develop this concept of reality that is seen in the markets. And then once you have that theory, you have to find an asset, something in the markets that you can trade to invest with that theory. And then finally, of course, you have to backtest it. You have to run you have to code up your strategy and test over history until it works, and find the way to make it work. So I wanted to demonstrate this with the classic that I'm sure you've all heard of, the sell in May and go away. And that theory by itself has no basis in reality. Maybe it's the bad weather, maybe who knows, but it's such a weak idea that you can't really base it in reality. So instead I thought that if we want to develop a theory on this, it would be that if enough people follow the sell in May theory, and the market has that theory by itself is too weak for reality, but maybe the better theory is that a lot of people who follow this strategy sell off their portfolios, and that causes the market to get broken. So the way that we build a strategy around this, just to test the concept, is that we'll invest in the S&P for all the months except for May to October, which is when the theory applies. So then the test for that is relative to the S&P. How well did this strategy perform? So we actually did this recently in our blog, and we went back to 1950 and ran a strategy using the curve above. If you can see the red line below, that's just the time period from May to October when apparently it's performing badly and everybody's selling off their stock. And then the time, the blue and green lines are the S&P in the November to April period respectively. And we also tested this inside the QuantConnect platform with the chart below on much higher resolution data, and we could make sure that it lined up. So yeah, I also have another algorithm that I actually traded live that I'd be happy to walk you through, but I actually didn't code it up in QuantConnect just because of time. And so this one I called opening volatility, and it wasn't rocket science, but the theory was that, like myself, there were a lot of people that didn't like holding strategies overnight. So because of the market risk that you could be exposed to. So this caused a lot of trading around the 9:30 a.m. and 4 p.m. period. And so if you actually look at the data and you see the volume of the market that happens in those periods, you can see that at 9 a.m. it's always very busy, and just before close it's also very busy. And so if you get a lot of people buying and selling stock, the price becomes very volatile and it starts to move very quickly. And so the strategy was to just buy these highly volatile assets at market open and then use that volatility to our benefit. And so the idea also was that volatility might give us some indication of people's long-term holdings for the day. And then finally, we spent the next few weeks and we back-tested the idea, and we built in risk control. We made sure that it had very low drawdowns, like I was talking about. And then finally, we had a great strategy, the opening volatility strategy, and that was trading every day, and it worked flawlessly for about 4 months until the markets changed. And it might actually still work now. I haven't tested it for over a year. But yeah, I have other slides, but I thought I'd open them there to questions. I'm not sure exactly how long we've been, but if you have any questions, please shout out.
Does anyone have any questions for Jared?
Hi, it's Jason Pollis. I'm wondering, how does your platform allow access to capital or for trading?
It's actually surprising. The more difficult thing is finding a good strategy with a long history. Once you have that, access to capital is very easy. But it's mainly because I've been working in this for the last 2 years full time, really, building up QuantConnect and building up the technology. I just get to meet a lot of people, and they're all looking for good strategies. So at the moment, it's proprietary capital, but the original vision for the company was to open it up to public investment as well. But that might be a few more years away yet.
Just so I understand fully, is your platform an execution platform or a trading strategy information platform? Do you execute the trades on behalf of the people who are investing and trading, or do you just simply provide them with the strategy and then they execute the trades themselves?
It's in our roadmap. We'd love to, if I understood you correctly, we'd love to add live trading. It's just we're looking for the right data provider to provide the live streaming data at the moment. That's actually the crucial piece of the puzzle that we're looking for now, because it's incredibly expensive. So we want to try and offer it at a very low price to the users. So we need to find a data provider that can let us distribute to multiple strategies with live data, and then sort of pass on that cost to the people that are trading live. But again, like there's multiple people that have offered to do the execution. So it's not the execution that's the problem. It's the data costs essentially that we're trying to eliminate for our users. So at the moment, you can do back testing right up until yesterday. We have end of day updated data for US equities and Forex. So you can design your strategy right up until the end of day. And we do want to support the quant community. So the strategy that you design is inside QuantConnect at the moment. But the parent framework that goes around it, we can open source that so that you can run your algorithm locally on your computer with your Interactive Brokers account or your FXCM account, for example.
Okay, thanks, Jared. We're going to take one more here.
I'm Dinesh. Hi, Jared. How are you? From Intelligent HQ. You didn't mention much about the community and the traders that you have, because I think that's a very important thing for the audience, and I'm quite interested to see how it's going. So how you been building the community and all the traders that you've been having, because the platform is right now a community. So could you explain that a bit further?
Right. Well, it's early days yet. We're still in beta, and we just came out in February. But most of our users are professionals, and they're actually fairly private. There's other competing platforms on the web with more open communities, which is great. I mean, we love seeing the rise of this sort of open quant movement, and really it's been helping us as people have become more and more comfortable with being more open about their quant strategies and talking with different people and working with a web platform. It's really helped us. But we're definitely interested in growing the community. And what we try and do is basically we try and be 10 times better than any of our competitors. So we're the only ones that can offer high resolution down to the tip level in our data. We're the only ones that offer a sort of parallel node supercomputer type of processing. So if you're doing any sort of intraday trading, your backtest can be done in a minute or 2 minutes, versus the typical backtest in competing platforms would take a few hours. We've got a full JavaScript IDE, which you can see here. You can code in full C#. You can have multiple files. You can have multiple projects. It's a fully featured IDE in the sense that we have version control. So you can I don't know again the audience, but version control allows engineers to collaborate in teams and allows you to track the version history of your projects. So it's a much more professionally targeted tool that we're making available to retail users.
Okay.
And to that end, because we have a version control system and because it's C#, we can actually allow users to upload compiled algorithms. So if any engineer...
Jared, I'm going to have to stop you there. Thanks very much for coming in and telling us about QuantConnect.
Thank you very much, and thank you for your patience.
Thank you. Cheers, Jared.